Hello, traders. Happy Monday to you and happy holidays. It's 8 a.m. Chicago time on the 28th of December, 2020. This is episode number 1906. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, as we move to the convergenttrading.com pre-market summary sheet, we are in a risk on posture in the overnight session. The market's been trending up on news that POTUS, Trump, it will and has signed. Let me see if it will or has. Let's not create fake news. It says, in a sudden reversal late on Sunday, Trump backed down from his earlier threat to block the bill restoring unemployment benefits to millions of Americans and averted a federal government shutdown. So POTUS signed the bill. One second. So POTUS moved to sign a bill of 2.3 trillion, of which about 890 billion or so was COVID relief and the rest. The market's responding well to that and has popped higher. You could see that allocation is to risk. Money's coming into the indices. The S&P is up 27 points, maybe even higher at this point. The Dow's up 163 and so on. Silver making a push, 3.03%. And money's coming out of the treasury. So risk on sentiment overall. The overnight session so far has traded 131,000 contracts versus a limit of about 400,000. The mode for volume. This dry air just kills my throat. The mode for volume is 296,000, and the overnight range is 50.5 points, and the edge of the boundary of 1 sigma on the overnight range is 52. So it's reaching what we would consider the edge of normal. The point of control, the mode for overnight range is 31 points. We're well above that. The market's in a trend up posture, has been rotating up, seems to have found its sellers so far, the opposing force so far against one of the key measured moves that I have on my chart. But overall, operating in a bull environment, we are gapping up to new all-time highs. The government funding issue appears to be moving out of the way. Of course, airlines are the top gainers here. Airlines are hurting for aid to keep their airplanes running with the loss of passengers and travelers. So there's a lot here for the market to be working with. But also remember what we talked about. What we talked about a couple weeks ago or last week, early last week maybe, that there's a positive bias. There's a positive bias to these last 2 weeks to the tune of about an average of 3.5 to 4% in the S&P from low to high. And this is playing out as it has consistently over the last 5 years. So this week, I'm not expecting it to be any different. I expect the market to continue to explore higher. Not seeing any indication that it's exhausted up here. It's doing so on light volume and light range, but it's still doing it. So that's where that stands. As far as the calendar, Dallas Fed Manufacturing at 10:30 Eastern, and that just about wraps it up. Let's take a look at what was well, not what we expected because I wasn't here, but you will notice that I left the Christmas Eve trade in here. Those of you who have been following for a while, at least since 2008, know that we normally cut these sessions out. We normally remove these short sessions, and the reason it remains in place is because the New York Stock Exchange, Wall Street remained open for Christmas Eve, and therefore the futures had a legitimate underlying market. And that's why we used to remove it, because equities did not used to trade on those days. And so there was no underlying market, so we treated it as an extended session, so we would remove that from the daily charts. But now that these markets are obsessed over staying open as much as possible, it's like a casino. The more time, the more money. We keep these sessions in place, and so therefore Wednesday's action is still in play here, and it remains in play. Wednesday gave us a higher low, lower high, an inside day, consolidated multi-distribution profile, but generally completely completely balanced, and with Delta basically following price for much of the session until later. When it rallied, it looked like Delta wasn't really there. Nice big rotation into the close, 14 and a quarter points. Delta rose, but didn't really push as far as price did. Not much to say here other than if you look at the last few days, we did have a rally up on Monday after poking below. We have a balanced day Tuesday, we have a balanced day Wednesday, and we have a balanced day Thursday. The market's been in compression and has been holding sideways after breaking some key markers the day before. Let me show you what that is. If we look at what is going on here, if we look at the daily chart, here's the day session chart, and if we back off a little bit and go back in time, you could see us putting in a low. Note that these prices are back adjusted for the March contract, so they may not match yours. If you don't back adjust, you'll just have a false gap in your data. We put in this low at 32.1675 in the March equivalent, and then we put in a higher low, higher low, higher low, higher low, higher low, higher low, and higher low on the weekly. But last week, we ended up taking the weekly low by dipping down below 36.3750 to 36.25. What we ended up doing for the week, though, is even though we dipped down on Monday, we ended up putting in a point of control on top of the composite point of control at 36.8575. The point of control last week is 36.81. And so what we had is a market that dipped down and pushed higher. So let's zoom into that a little bit. It's a market that dipped down but pushed higher and ended up closing above the MC point of control right in here. So it did poke down. We have a nice little excess here. We did break the weekly one time framing, but Monday really marked a wide range. Tuesday was an inside day. Wednesday pushed higher into 37.02, which was the target for Wednesday. We went to 37.0175. We missed the target by a tick, but came back into balance here. And then Thursday opened, tested below, tested last week's point of control, and finished a little bit higher, but still an inside day. So this has been coiling a fair amount right in here, and currently we're trading at 37.24 in new all-time high territory. So this was a test that failed to hold lower prices. Sellers failed to bring in further selling and to bring in interest to hold prices below the prior week's low, and they again failed to hold prices below the MC point of control, causing buyers to more confidently step in and take prices higher. That tagged with, and that was with Thursday's action. News was not out yet. That, coupled with the news, gives us a gap up today. So we're opening in a pretty wide gap here from the prior range, and a relatively small gap, about 6 points, to the all-time high. and that's where we stand. So I'm expecting that the pressure is going to be against sellers today. That buyers are likely to step in and buy up any dip that we see today. That's the primary expectation. The balance point is still 85.75 below 36.85.75. That's about 40 points away. So that's how things are shaping up here. Coming into the overnight session, here's the overnight. This is a 30-minute bar chart. We open up right down here, tag the 36.76. If you recall, the 76.77 has been in play quite a bit over the last 2 weeks. We tagged the 76 turnaround, and in that same half-hour bar, we push through the 3700, and then from there we simply one time frame up in the Asian session. Right here you can see higher low, higher low, higher lows until about 10 o'clock my time, and then we find balance here. We have what is a P-shaped profile, a short squeeze, short covering move here that ended up getting a little bit of a blow off and excess into the 37.2650. I have a 37.27 measured move up here in this area. You can see there's a lot of clutter in this area. Let's zoom into that a little bit. So this measured move right up here, 37.27, we got to 26.50. And the expectation is we are likely to continue higher. And you can see these measured moves kind of get tighter and tighter. The big one we left below us at 37.19. This has 3 measured move targets in it at 37.19. This is where we balanced out in the overnight session, and now we're pushing through. We are likely to continue to squeeze into these 30s over the next week or two. This is, remember, Thursday this week, actually, New Year's Eve is a normal day, is a normal trading day, according to CME. As I said, these exchanges like these longer days as the markets remain open. Of course, transactions continue, and things kind of keep moving along. So if we look at let me just pull it up here. This is the CME's schedule right here. And you can see that on Thursday we close as we normally do. The session goes on until 4 p.m. Central. This is Central Time, Chicago time. The Thursday is not a shortened day. We're going to continue through the end of the session as normal. Friday is closed, and then we're back in business on Sunday for the new year. And by the way, Happy New Year to everybody here. Wishing you just a tremendous, successful, prosperous, healthy, and most of all, safe new year. What are we looking for today? So let's see what we've got for today. Here we go, our current screen. So let's temper our expectations. We are in a rally, but just the expectation is light volume, light participation, and light ranges. Yes, the move has taken place overnight, as a lot of these moves have done over these last few years. I mean, look at this back here, massive move down, and then we get the move back during the day session. Remember these darker bands. These darker bands are day session. The lighter bands are the extended trading hours to me here in Chicago. So what are we looking for today? The expectation is, since the inventory is about 88, 89% long, the expectation here is an open auction that responds back to at least the overnight point of control. Which is at Let me double check it. The overnight point of control, 17 and a quarter. Is that still correct? Yep, 17 and a quarter. Expecting it to respond to there and consolidate. I expect it to be relatively slow. Attempt to push lower. We still have the gap zone from where we open to where we are here. Expect that to remain open. I expect it to hold here and then trade sideways once it balances out. So I'm looking for the inventory to balance out, and I'm looking, the news is already priced in. The expectation is it's likely to balance out and hold sideways and get stuck in between this 37.12, which, by the way, was a key resistance area right here, 12, and then on the upside, this 27 area, this right here. I'm expecting it to get stuck in between these ranges and to zigzag and bounce around in this area. Remember that 18 is a multi-target, and it's the prior all-time high, and I'm expecting it to play sideways in here. The secondary, not seeing any negative news. The expectation is for it to be an open auction that drops, looking for an impulse higher, push to 27,650, give us the overnight stat, and then start pushing towards this 30-31 area before it consolidates and falls back into the range later in the session. Really low expectations today. I'm not expecting to be actively trading. My focus is going to be mainly on preparing for next year. There's a ton of work to do this week. And if you're a Convergent member, just remember that this week I'm only here for the first hour or so. I'll be watching the markets. I'll comment if there is something to comment on. But this week is dedicated to deep work, and I don't intend to trade very much. So I'll be there, but my focus needs to be on preparing for next year. Okay. Good luck, everyone. Make sure you keep your risk in check. It's not fun ending the year on a negative note. Be conservative. Don't set high expectations here, but stick to your plan and risk. And good luck. And I'll catch you tomorrow morning. Take care.